As BTC experiences a bit of a push, finally we can see some movement on the higher caliber altcoins. Statistics say a higher probability breakout with high upside targets are to be expected, but I'm not sure that's the case this time around. There's trickery in the move, so let's pop open the hood for a look. Welcome back to the channel on this silly Saturday. This is ARCa. Let's dive into ticker symbol SOL. Let's kill a team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do that whole thing so that we can get some attention into the channel, right? So we're going to finesse that algorithm so we can get some more viewers here. Let's go ahead and start this thing off very simple, very basic, right? Let's go ahead and do what a lot of people look for and draw some formation, right? So here in the hourly time frame, SOL is actually experiencing a lot of consolidation, and you can expect this consolidation in a holiday season just like we're facing right now, right? Easter weekend does present a bit of sideways trading, some boring trading, right? So what we're observing here is the potential breakout from a descending triangle, a right angle triangle here, right? We have already broken beyond the hypotenuse of the triangle here. We're coming back to test it, see if we can actually continue on to the upside. That green moving average is in the SMA 10. We are just below the SMA 30 on this, and this is your SMA 60, right? So please just understand that this type of move here, sure, it does appear to have consistency here. It does appear to have a nice little breakout with a retest for continuation to the upside, but I do have to show you several other ways on how to observe this potential move. Okay, so if we are looking at complete range here, right? Let's just go ahead and take the psychological targets based on this, right? So the way you do this is these triangles present to you three potential targets, right, for the upside. This would be your target number one. Let's just scooch it like this so that we can kind of have it in our visibility, right? So it looks like that would be about 197.20. Your second target would be from the center of the triangle, right about, arguably speaking here, right? Let's go ahead and plot that right in there. And just like this, right? Let's just assume that that is the candle that is going to give us the clean breakout, right? No exposure to the inside of the regression here. So second target 198.97, and the largest target would be your target number 3, the back of the triangle, right? So just something like this here, right? I will give you the bull case in this scenario, but know for a fact that this formation, when it's built during the upside, this is usually failure. Right? This usually means that price action would likely play to the downside. So this is why I mean that there's trickery in the move. This is not a continuation formation. This formation, when built during an upside and you're creating these lower highs here, that usually signals failure. And a test to the downside could be of probabilities here. Okay, so in that case, let's take into consideration the downside targets as well. So let's just say that we were to break down the following hourly candles. So we'll go ahead and keep those targets in mind as well. Okay, so these would be your lower bound targets based on the true behavior of this formation. Know that this is an hourly time frame. This is just a silly little triangle. Yes, it has a good batting average, right? But still, we have to consider its psychological properties, right? So let's just go ahead and leave here a few targets to the downside so that we are aware over the potentials, right? So here, I'm just going to list them here just for you, just so that you know, and we could be on the same page, right? So the upper bound targets, let's go ahead and do the same thing. Right, so these are going to be the upper bound targets right here for us to observe, and it's going to be your third one right up here. Okay, now statistically speaking, is it possible? Can we get all the way up to this target here based on the breakout from this hourly time frame triangle? Well, please remember that this is a bear play, right? Technically, this could be just a little bit of a fake out here. Could be just a quick look above and then a failure. We are failing the SMA 30 at the moment, so we have to keep ourselves weary, right? So daily ATR, you're looking at about very interesting here. It looks like you have about a $13.26 ATR, which is pretty massive, and that would lead you to based on the opening of the day, right? It would lead you to a target of about 207.56. So this lands within the bounds of that, so it's still okay. Now, the lower bound target, this is your daily ATR, right? $13.26. That means from the open, up or down. So take a look at this. Your daily ATR low, 181.03. And it looks like we can fully extend here to a 187.56. So it's definitely feasible. All right, it's absolutely feasible. Now, if we're looking at an extension here, let me see if we can see this from our end here using a different different strategy here. Let's see if we can do that maybe. Maybe not from this perspective here, but okay. Now, if we're looking at the upper bound of the second standard deviation multiplier based off of a bounce from the mean, which is 196, notice where we are now, okay? Your mean reversion here is 196. So from that top side of $200 that we got right here, upper bound of the 2 standard deviation multiplier, $200. We mean reverted all the way back down to the areas of 196.14 where we are presently. So we're battling that mean. That means that we have an absolute probability of getting ourselves back up to those targets, right? So that would be your upper bound of the second standard deviation could be at around $200.40. Looking very familiar here. And of course, to the downside would be the exact opposite too. Check it out, 191. And we're looking at 190.28 to 187.56. So these numbers absolutely correlate here with the statistics. So, do keep that in mind here. Now, if we are to reach this on an hourly play, well, your current ATR top, your hourly time frame ATR is at about $1.96. You have 25 minutes and 44 seconds to close this hourly time frame. We could reach 198.56, which is looking very familiar there, and a low of 194, right? So that could be right around down here, right? So huge downside on the hourly time frame. That's where we have to be careful. It does have a long way down. We could increase volatility here very, very fast when the asset does drop. Okay? Now, let's observe this here on a different type of strategy, right? So these are two independent formations, right? I'm just giving you the formations here before we actually look at the statistical side of the analysis here, so we can really see where targets can be, okay? So this on a downside, right, we're now experiencing higher lows, and we're experiencing a flat top. This is a fake out here, a quick look above. This usually signals a bear play. So that means that, we would, potentially see on this 8-hour iteration here that there could be, let me get rid of the magnet, there could be a failure. Right, so we'll go ahead and take a trend line from the top side to the very bottom side of that, the regression here, and let's take one from the center of the triangle as well, just like we did on the prior formation, and one back here. Okay, and this is another way that we can, potentially see if we have any rhyming to the targets. Okay, so let's go ahead and apply this here. Put it right about there, and now this one would be obviously applied there and just left right there. Okay, so we're looking at a 180.57. Looks like we have a 170.09 and lower target of about 154.34. This is a larger time frame breakdown, and it is expressing to us a deeper correction, that of which we're seeing here from this side of the analysis, right? So you got to be careful with this macro formation. As there is this contraction on the higher time frames, and especially seeing Bitcoin kind of consolidate here within 69,000, 70,400, right around there, that could naturally bring the price down here with high contraction. Okay, so these would technically be the targets. Now, what if we're observing this in a way that we're maybe bullish and not bearish? What if this formation here is actually going to present a type of liquidity trap of sorts, right? So something where we can come right back down and test the breakdown area of 187.91 or 188, 190, right around there, and bounce from the bull pennant instead, because we're already breaking out. We're already breaking out of this pennant here. We broke out of it. Now we can come back down and test that support before a continuation to the upside. So there could be a drop. Do we have anything at 188? Well, we do. Check this out. 187.56 is actually our bottom side of this play. So 187.56, let's see. That would put us right here. Look at that. Right there. That is literally the test. Let's go ahead and put a line just like that. And let's kind of draw it in a different color, right? Just like this. So that is perfectly the regression of the bull pennant. So there is a potential here that the asset can go to an upside. Now, what would take us to that upside? How can we do that? How can we gain probabilities? Well, this is where statistics come in. Let's go ahead and take a look at this. So what I'm doing here is back testing. This is actually not a daily, right? This is an 8-hour back test of linear volatility versus momentum, right? So historically speaking, I took samples throughout the entire trading history of the sole asset, right? You can see all of the iterations here drawn out. Those are all mine. I drew that by hand, right? Just for us here, just so that we can gain the probabilities here. I charted it out here, right? We have a nice bell curve, distribution curve here. If you are familiar with statistics, then that's what it is. Okay, and we have these are all the sample sets here. We have the data set here, and let's go over those potentials now. Okay, now first, let's determine what the higher probability targets are within breaking out of this pennant. Well, remember, 3 targets, right? Let's go ahead and take the first one. And that would be this here. We still haven't seen that target, 205.08. Now, let's take the other target from the center of the triangle. Right up, actually, you know what? Let's pull it back just a little bit. Right about here. All right, let's go ahead and take this into consideration. We're going to plot it out right at the breakout of that candle as well. Let's just make sure that we can keep it consistent here. 217 top, and our upper bound target could be right about here. Right, 3 probabilities here. All right, so we'll apply it, yep, similarly to that one. And let's leave it right about there. Okay, so this is going to be, please don't get this confused, right? These are going to be the yellow targets based on the yellow pennant. And what we're doing here is we're combining strategies. We are going to take the higher probability targets based on a psychological breakout to a psychological price objective using Fibonacci retracement and statistics, using linear volatility as our behavioral platform. Okay, so for example, let's go ahead and take into account here the swing high to the swing low with a Fibonacci retracement, just like this. A little weird, a little different than how people tend to put this together, but all good. Okay, we're going to take into consideration 238. Yeah, we're going to take into consideration here some targets, right? The 1 spot 618, the 2 spot 618 at about 232.36. Let's go ahead and apply that there. We have the 2 fib here, pretty strong in correlation with that top side target there. So we'll just kind of leave this just about there. And our top bound here, or the lower bound target, is very confluent with the 1 spot 272. Okay, so yeah, we're looking at about a 205, 217, and a 238.80. Okay, so these are our upper bound targets. Now that we know them, and they are confluent to geometrics, let's see if we can gain some probabilities here with these statistics. Okay, so this happens with any expansion phase of volatility paired with an upside pivot or an upside bias, right? Using momentum. Okay, so now as you can see here, we are definitely in the bullish control zone here, and we still have an upside bias on that 8-hour time frame. Okay, so I want to let you know here that I have measured 92 total iterations throughout the entire trading history of the Sol asset on the 8-hour time frame. That gives us 72 correct iterations. These were 72 guessed correctly to the upside out of the 92. That gives us an average upside accuracy of 78.26% with an average upside thrust of 19.23%. I have not taken the days here because of the specific situation that we're in, right? So time here doesn't really matter to me personally, okay? And I've practiced these back tests, trying to time them all the time. The markets really always tell you can't time me, but it's all good. It's okay. Sometimes we can get that probability metric, but in this case, I feel like it's entirely irrelevant. Okay, so let's go ahead and now add that 19.23% to the upside here, based on that, based on the signal firing, right? So I would say that the signal fired here right about this candle here, this 8-hour candle. So the opening valuation of this candle here is 196.39. Okay, so let's go ahead and start applying this 196.39. Let's go ahead and see if we can get as close as we can to that. 42 should be okay. Let's go ahead and add here a 19.23% move to the upside and see where that takes us. Okay, so that's going to be kind of a large move here based on the average upside thrust, the mean per se, right? So 19.23 right about here. So that takes us to 234.17. Now, just in case, right? Your 19.23% is your average, right about here. Now, if we take the standard deviation, then we may be able to perform something a little closer here. The standard deviation is actually a 15.2375% move. That my apologies. I actually should have put it down here, right? That would be around 68% of the 34-34 split, right? 68% of the results would be your 15.75% standard deviation upside thrust. So let's go ahead and add that there as well, right? So I'm going to try to match it as close as we can to that, to the bottom side there. And let's add that 15% too, 15.75, right? That should be close enough there. 227.41. All right, you can see what we're doing here, right? We're just gaining our we're just putting our targets together here based on the back test, and we're pairing them with the upside probabilities here. I mean, we have a 78.26% probability that we can see an upside here. All right, so now let's go ahead and take into consideration the further calculations, because I have calculated the upper and lower bounds of the first, second, and third standard deviations as well, right? So this is all done by hand. So let's go ahead and continue that and kind of just look at maybe one more, right? Because I feel like the 50.72 and the 66.47% move to the upside could be a little bit out of the question for now, so we're going to take into consideration just one of the higher probability bounds. And from there, we'll just pair some of these targets, right? So 34.98% on this, right? Let's see. Let's leave it at 35.07. That's cool. 265.24 is your upper bound target, right? So now let's take a look back. So 234.17 is your mean, and 15.75% is your standard deviation move. 234.17 versus 227.41. Let's look to the right here and see if we have any of those targets, right? So please remember here, your 19.23% move to the upside, your mean is 234.17. Take a look at this here. You actually have your pennant top at 238.80 with a 2.618 bound at 232.36. The target, 234.98. I think it was 234.17. Let's see where that lands us. 234.17 puts us right about here. Okay, you can see that it's within the bounds of the discretionary target that we put together. Very clean, right? Now that's actually just actually, you know what? We can a 3.48% move. The lower bound of the first standard deviation is possible, but I think we may have already figured that out, right? But let's why not that thing, right? And let's just put it here anyway, because we could see some targets that we're not observing at the present moment here. So that would be 202.09. So just about 203. And as you can see right over here, this is your first target to observe, 203.84 to 205.69 at the one spot 272. Guess that, man. It's looking like it's looking like it's looking like we're in the pocket, right? So 203 is going to be the flat number. So right about here, right? So let's just kind of leave it there, and that's going to be our focus zone. Okay, so yeah, I do think that there are some pretty interesting targets here to keep into consideration. If we are to kind of look at other targets here, like your standard deviation of 227.41, and look back over here, well, what's there, right? 227.41, well, that's already close enough. It's already close enough to the 2.618, so why not? Now, let's take a look at our upper bounds here, right? Because we do have one more higher target to observe based on the statistics. Well, take a look at this. 35.07% move to the upside takes you to 265.24 based on the upper bound of the first standard deviation, right? So 265.24. That puts you just above the 3.618, right? Right in the center here. 265-ish, right? So right about there, you can see that you have a space right here, a little bit of a grand space, right? But it's okay. You can always kind of take into consideration a range instead of a single target, right? Take into consideration your 4 spot 236, 271.95, to your 3 spot 618, 256.09, and your focus target being, very curiously enough, close to the 50% of that retracement. Okay, so those are your targets here for ticker symbol SOL, and yeah, there could be a continuation to that upside here. Just be patient with the markets, right? Know that we are experiencing high contraction based on the holiday here in the U.S., right? So please be careful, practice proper risk management, and always trade responsibly. If you have any questions or concerns, please reach out to me at arcabulls@gmail.com. And please know that I am also offering a mentorship program coming up, right, for strategies. And that's going to be an 8 to 12 week program. So go ahead and get in touch with me as soon as possible, right? So arcabulls@gmail.com, or you can reach out to me for the course at ArcMastersCourse@gmail.com. I also tend to code my own indicators, right? So this, for example, here, this indicator is very much inspired by the caretaker, and for his BBWP indicator, right? So I have coded in a heat map based volatility indicator, and yes, I kind of have it coded in within one shot here, or at least I'm trying, right? But this is definitely what's coming up next here, background heat map and everything. All right, team, so get in touch with me here with any of those questions, and I will be happy to answer them. Thank you so much for watching, and I wish you a great rest of your weekend. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, ever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your day, and I will catch you at the bell on Monday. Adios, team.